Great morning, folks. And today we're going to be talking about cracking the code, overcoming 2024's challenges, biggest challenges in the short term rental market, part two. Just a couple weeks ago, we went live with my colleagues and partners, Brandon and Hollis, who is actually both of them are actually participating in an effort to do a big project, big short term rental project across the United States here, and we talked about. Mainly, I'm going to kind of review what we went through last time, give you a quick overview of what we went through, and what we're going to do is we're going to talk about the solutions today, how to solve the biggest challenges, and how we as a team, as a company, are coming around in this market, overcoming, pivoting, changing what we're doing, and basically upgrading, just pivoting how you do it. I was reading a book recently called Empire Builder, and it's by Adam Coffey. Right, I am a book addict. For those of you out there who don't know me, I listen to about 3 to 4 books every month, and they're not just business. I listen to all personal development, mission, business, parenting, all kinds of books, actually, marketing, sales, everything. So that has been one of my secrets over just so many years in my personal growth, the books, right? So, but let's get started, folks. Today, it's a great morning. Let's go over what these challenges, what are the current challenges in the short term rental market? Okay, well, we talked about high state real prices, excuse me, we talked about high real estate prices, okay? And you guys know that since 2021 or around COVID, when things exploded, right? When COVID happened, everybody was like, "Oh my God, what's going on? This is a little crazy," and they went in hibernation mode for a few months, and nobody really knew. But then once the government started giving trillions of billions of dollars away to every American, well, everybody said, "Oh, well, I've got some money now. I'm going to go out there and buy some properties or buy some, buy out spend." So consumer spend raised through the roof, right? So 2021 was one of the biggest years in consumer spend ever, and in the short-term rental industry was the biggest spike I've ever seen, and I don't think that's ever going to happen ever again. So, what happened when consumer spend went up? Well, real estate prices also went up. Now, while the short term rental industry came back down in 2022 and then stabilized in 2023 back to pre pandemic levels, what happened in the real estate industry? Well, you can't make any more of these houses, but you can turn these houses that are out there into short term rentals. So, people basically started buying houses, and supply got super low, right? When supply got super low, no matter what, no matter if interest rates went up, right? And the Fed was just trying to do everything that they could, or they still are trying to lower inflation, even though inflation is much lower than in 22 and 23, right? Then the Fed went and said, okay, I'm going to continue to keep the rates up. And they're still pretty high here at the time of this recording. It is June 2024. So, and we are like at 6-7% interest, and they're just not coming down. I don't know what is happening out there with these Fed crazy guys. So, my thought is, okay, well, what happens? The short-term rental industry actually did come down to pre-pandemic levels, so we've normalized and kept with our steady growth, while the real estate market has not, just barely tapped a little bit of, a little bit of drop right now. And why is that? Because the supply and demand curve are at not at an equilibrium. Okay, meaning the supply is short and the demand is still pretty high despite of the interest rate. So supply has decreased, right? And it hasn't caught up with today's day and age. And then demand has continued to just be as normal, right? Obviously not as crazy as 2022, 2021, but that's the main reason, right? So then interest rates, they have not come down. It's insane, right? So in addition to that, you have those two challenges, right? So when you're going out there to invest in a property or try to figure out like, hey, what's a good property that I want to buy, right? And you do your market research, you do your analysis, and you go through the process, and you're like, okay, well, sometimes this investment doesn't pan out, and then the next time it doesn't pan out, and the next time it doesn't pan out. Why doesn't it pan out? Well, because your prices in the real estate have skyrocketed in the real estate market, okay? And then interest rates are so high. So those are the main two factors and the biggest challenges right now that all new investors are facing. So what do we do? I'm going to talk about that in just a second. The third one is market saturation, right? You guys heard me just a couple minutes ago. When 2021 happened, boom, everybody started buying. Everybody and their mama thought that they could invest in short-term rentals, and they did. So today we have thousands and thousands of hosts saying, "Oh, I'm not making any money." Well, all you did is bought a property, it launched it, and you thought you could make money. It doesn't work that way anymore. Okay, we have pivoted. We have done everything we can to create what we call unique experiences. That's one of the solutions. I just gave you the hint, right? So now I've got four more, by the way. I just gave you one of the five solutions that we're implementing. I'm not going to talk about all of them because there is dozens. Okay, so let me go back real quick so I can finish the challenges. Number three, increasing regulation. So almost every market is just changing up the regulations. Why? Because irresponsible hosts are out there, irresponsible investors who just hand their properties over to somebody that doesn't know how to do it. And that somebody co-hosting, helping out, does not know how to prevent and how to anticipate the issues that could come with being a short-term rental operator or host, which could be bad guests. So they take in the bad guests and they don't know how to prevent all of these issues. And then what happens? Well, neighbors complain, and they're pissed off. The cops get called, and then there's this whole entire chain reaction of issues starts happening, and then it goes back to the HOA, and goes back to the city. So at the end of the day, you have complaints, and then eventually the cities change their regulations. Well, not everybody does it like these guys, but a lot of them do. Why? Because this business is an easy to entryway business, right? Anybody could just go out there and buy a property or rent their garage or their garage apartment. Is what I meant, not garage, right? Their garage apartment or rent an apartment. I used to do that. I used to go and rent 4, 5, 10 units at one time downtown Houston and list them on Airbnb, and it would cost me $5, $6, $7,000 a unit, 1, 2 bedrooms, right? Today, it doesn't work that way anymore. It is a completely different world, and you've got to know what you're doing, and you've got to be more like this. This business is evolving. It is becoming more of a professional business, just like doing commercial real estate, right? Yeah, you can't just go and say, I'm going to buy this thing and just, buy the property and rent it out. You've really got to understand, right? It's more complex. So this business, the complexity of it is just rising. Now, there are a lot of complexities in being a short-term rental investor and being a short-term rental host, but it's fairly easy to get into the business. So, okay, now that we've talked about the challenges, how about we go into the solutions? Okay, so number one, right? Number one, these are the solutions for investing in short-term rentals in 2024. Number one, here's what we're doing. We are investing in recession-resistant markets. Okay, well, George, what does that mean? Well, look, guys, we've gone and done the due diligence, done the deep and of our research. Okay, so for us, a recession resistant market, and a lot of people could say that they are, but they're not doing exactly what I'm about to tell you. Okay, investing in a recession resistant market simply for us means that this market could overcome a recession if it was to happen again. Well, George, where are you getting that information? George, do you know about what you're talking about? Like, how are you just assuming? Well, absolutely not. We're going back through the last recession, and we're actually doing due diligence in two sectors. Okay, there is a thing called the hospitality GDP, and there's a thing called the home price index. Right, so we do our research in our markets based on those two factors. So for us, if our markets had a relative growth, right, they actually grew instead of crashed during those 5 years, 2007 through 12, right? If that market grew in median home prices for us, this market has overcame the Great Recession, and it's more than likely to overcome another recession by it not crushing, which means that it's relatively growing at a average of 3 to 5% without skyrocketing like most of the markets out there in the United States today. Then we go to the home price index. I mean, we go to the hospitality GDP, and we do the same thing. Hey, what hospitality markets grew, right, between 2007 and 12? These two factors give us the edge when it comes to investing today's day and age of short-term vacation rentals. Okay, so number two, better market research. Okay, so better market research for us is actually doing what I just mentioned. So when we do our market research, there's actually two sides of the market research you're doing. Well, you're investing in real estate, but you're also investing in hospitality. Going into Air DNA, quote unquote, I mean, you're not going to get the whole picture, first of all. Number two is Air DNA has flaws, so you really got to tweak and understand how to like fizzle out and remove the flaws from Air DNA before you start making assumptions. I'm not going to talk about that today, but I will talk about that if you leave me a comment and say, George, I want to hear about what are the flaws of Air DNA and how do you maneuver them. Hey, drop a comment here on this actual post on wherever you're seeing it. If you're seeing it on YouTube or Facebook, doesn't matter, right? So let me know and we'll make a video about that. So then you have essentially you're doing the market research also on the real estate side. So you've got your vacation rental side, then you do your real estate side. But then on top of that, we also do the hospitality side. Okay, we do the hospitality side, we do the real estate side, we look at the last recession to find out if those markets were recession resistant. And then we do all those three so that there are really 5 components in our market research. Okay. So, and if you want to learn more about market research, we've definitely got some resources for you. So drop a comment below and let us know, hey, I want to learn more about market research, or just how about hashtag market research? Okay. So fantastic. So number 3, so we've covered investing in recession resistant markets as one of the solutions. And then we've also covered better market research, right? So you've got to pick the right market. So now after you pick the right market, you've got to do one more thing. You've also got to pick the right property. And this is probably the third most important. Sequentially, what I just mentioned is essentially the order of how we do things here at Creative SDR Wealth and Empress Capital. Okay? So picking the right property, it is like finding a needle in a haystack. Why? Because of what's happening, because of the big issue of saturation. There are so many markets where 40, 50, 60% of the hosts are just not making any money. Okay. And a percentage of those are losing thousands of dollars, right? So if you don't pick the right property and you are in a recession resistant market, you are doing great market research, right, to find out what the market has to offer in the 5 angles that I mentioned earlier, but you don't pick the right property, you're gonna lose. Period. Hands down, no ifs or buts about it. You're gonna lose. Okay. So picking the right property, it's like, I mean, let me make an analogy here. Picking the right property, it's like actually driving the car on one lane. If you go off, you're gonna crash. Okay, that was a great analogy, wasn't it? Let me know in the comments if you like that analogy. So picking the right property is like driving your car in one lane on the freeway. Simply, you've got to pick the right property. And don't get me wrong, when I got started, I did get started with different properties. So for me, where I got started, where I was in 2018, that property or those types of properties, the one bedrooms, really cheaper, lower end apartment rentals, which I did rental arbitrage, were completely different. Was a completely different strategy. It was right for me. So picking the right property is not about picking the right property that the market tells you only. It's doing that at the same time, picking the right property that fits you in your goals, in your budget, in your investments, in your strategy, and everything you want to do by jumping into this game. So picking the right property is the third most important thing. Number four, it is enhancing your interior design and amenities in today's world. Even if you pick the right property, even if you do great market research and you invest in recession resistant markets, if you don't amenitize your property up to the standards of whatever goal you're trying to get. So let me just give you an example. If you do market research and this market research says, okay, well, I'm going to get 100K for this property, right? That's what we do. I always preach, hey, for me, my screening is 20% of my purchase price. We usually buy $400,000 to $500,000 properties, and I always shoot for six-figure properties, 6 figures a year, right? They gotta, top line revenue me 6 figures. Gotta bring in. For me, then it's not worth it if they don't. Okay, so the interior design and amenities so important, ladies and gentlemen. You can't miss that, right? That is like number four pillar, the number four pillar. Okay. And recently we launched a project in Cypress, Texas, where we came in and essentially bought the project. It was a $300,000 raise. We purchased the property around 455, and I'm going to do a case study about this pretty soon. If you want a link to the case study, or you want us to drop you an email with the case study, or you want a notification, or you want us to invite you, please drop Cypress case study on the chat as well. Okay, just let us know, send us a message. And this is a case study. We bought this property for 455. We put in around 135,000 in renovations, additions, amenities, a whole business plan around this project. It was a triplex project with the one main single family house with a really badass pool, right? Excuse my French here. With this pool, we added a pickleball court and we went all out. And so far, wow, you're not going to believe it. In 3 months, we are over $55,000. 3 months, around in or around $55,000 in top line revenue. Okay, so pretty insane. So that would be March 15th. So we launched it 2024, April 15th, May 15th to by June 15th, right? So less than 3 months. Believe it or not, right around 50 to 55,000. Now, that doesn't come just by luck. I mean, there is finding the best markets, right? Investing in recession resistant markets, right? Finding them, right? Picking the right property, right? And also doing an amazing job in your interior design and amenities inside. But that leaves us with one step, one tool that I want to reveal in your bonus today, and it's creative financing. Creative financing is our fifth strategy. Well, our bonus strategy, because I already gave you five. Our bonus strategy today, and we are masters at creative financing. We have done so many deals in creative financing. As we speak, we are building an acquisition arm to just acquire creative financing properties. What I mean by that, well, I'm not going to go deeper into that, but I do have trainings and videos about creative finance, and that's what we talk about here at Creative SDR Wealth as well. And we teach our clients how to really acquire these properties, creative financing. We partner with them and we do deals with them, right? And man, it's awesome how creative financing are in our entire 5 steps have allowed us to scale our business. And our latest just reveal, this comes from like a place of empowerment and inspiration for you folks. And we are 99% there to locking up a $7 million short-term rental portfolio. I'm just going to leave it at that. I'm not going to tell you any more details, but but it has just been a blessing, you know, over the last few years. But thank you for your support. Thank you for everything. I know I just went off topic, right? So, but I get excited about this stuff, guys. So, creative financing has changed our lives as well as short-term rentals. Okay, so those are my five plus the bonus strategies and how we're overcoming. You know, we're here every couple weeks. We're gonna start putting some more consistency here. If you like this video, please let us know. Just dropping something, a great work, great stuff on the comments, so that we can create more videos like this for you folks. But that is it today. That is it today. If you have any questions, please drop them in the comments below. Just let us know. Hey, I've got a question, George. Blah blah blah. Just drop the question, and I'll personally answer the questions for you. So, quick recap: we've gone today through the solutions for investing in short-term rentals in 2024. We've covered investing in recession-resistant markets, how we quickly do the best market research possible, investing in the right property. We've covered a little bit of the interior design and amenities, and then the tip on the top of the strategy is creative financing. So it's been a pleasure again. If you are interested in partnering with us, investing with us, or learning from us, please feel free to drop a comment and send us a message. George Salas here, Empress Capital, Creative STR Wealth. See you guys soon. Peace.